In this video, I'm going to talk about how to tell if breaking news will affect the market or not. Stay tuned. Hey traders, a very warm welcome to you. Okay, so how do you tell if breaking news is going to move the market you're trading or it's not? We've all been there. You're expecting something to come out, breaking news comes out, the market goes and does nothing. It just sits there and does nothing. Or vice versa, breaking news comes out, all of a sudden it just rips up to highs, rips down to lows, and you're thinking, whoa, where's that come from? So how do we kind of tell what's going to happen? Now, of course, we never know for sure, and with trading all we're trying to do is gather clues and put all these clues together to give us an idea or probability or some kind of extra edge to understand whether something is going to happen. And it's the same with this. So this is the process that I look at when I'm trying to decide if something's going to move based on breaking news or not. So I'm going to split this up into pre and post. And what I mean is pre-news and post-news. Now this might seem, hang on, you can see obviously if it's going to move after post-news. Bear with me, I'll talk more on that in a second. First of all, we'll look at pre-news. So in other words, how do we know that something is going to be interesting or not? The first thing is we're going to look at, if it's the economic calendar, we're going to look at the economic calendar. Most of the time, things have got a little star by them. It's quite useful for us. If we don't know anything about economics, we can look at that and there'll be a little star, a little red star, or something that says, hey, this is potentially has a high market impact. You know, little stuff like, I can't think of any off the top of my head, but there's little stuff that comes out regularly from the economy that nobody cares about. It's useful for economists, but the market doesn't care. The market really doesn't care. And then you've got stuff that's a little bit more important to the market, like jobless claims coming out every week, which are a little bit more important. Then they're not as important as the monthly non-farm payrolls number. We're talking about the US here, very important. Or interest rate announcement, very, very important. These kind of things are important. CPI, potentially PPI, can be. But again, you see, we don't know. So how do we tell? So the first thing is we filter out into stuff that we know could be potentially market moving. So let's say we've got a non-farm payroll number. We know that has potential to move the market. Now, we need to look at that number a little bit closely and say, okay, where are we in the cycle of jobs? Are we at the top of the economic cycle? Are we at the bottom of the economic cycle? Are we in the middle? In other words, are we expecting an extreme number? Now, I don't expect you to go out there and do all this analysis. So an easy shortcut to do is to literally, you do your economic calendar as you normally would as a day trader or swing trader, whatever it may be. And you know what's coming out during the day numbers wise. The easy thing to do, guys, is just then Google that and say non-farm payrolls, upcoming non-farm payrolls, upcoming interest rate, and read an article. You know, an article, if there's lots of articles that say, hey, traders are on edge waiting for this non-farm payroll number, there's a potential that we could have a tick in this box that says this thing could move the market. If we've got hardly any articles, or we've got a couple of articles from the mainstream, you know, financial media that just says, you know, we've got the jobs number coming up, nothing's expected out of it, no one's really watching it, that kind of language. I'm not going to say that in too many words, are they? But you know, you'll see the kind of way we're looking at it. And also, a way to check is to go back to the previous jobs numbers, dates, look at the intraday chart and see how the main things have reacted, like US dollar, Dow, treasuries, that kind of stuff. Obviously, depending on what we're trading, I'm talking about US specifically as an example here, but whatever country you're trading or instrument you're trading, could be crude oil inventories, nat gas inventories, anything. So we go back and we see historically in the last few weeks or few months or last few occurrences, did we get big moves? And if we've had big moves, then potentially that's going to move the market again. If we haven't had many big moves and the media's not that interested in it, we can assume that traders, you know, who are throwing bigger size around, institutions, hedge funds, aren't that bothered either. So we can get a bit of a clue beforehand as to whether this thing is going to be market moving or it's not. Generally speaking, if we go through those steps, we've got a good idea of what's going to happen. So we can filter it and say yes, give us a yes, or a no before that, or grade it however we want to grade it, you know, in the percentage terms, however you choose to kind of do this research. But that's your kind of strategy. And then after the news has come out, the reason I say post-market, you may say, well, it's pretty obvious, right? If it's rocketing, it's rocketing. No, because when we have news come out, often we're either going to get a couple of things happen, aren't we? We're either going to get, literally, it sits in a straight line. We get a spike to the upside, a spike to the downside, back to the middle, or we get a rocket, and a new trend occurring. Those are, I'm being broad here, but they're generally the three things that can happen. Now, if it sits in a straight line, that's probably, we're already expecting it not to do anything. It comes out, no one's really interested. Maybe liquidity dries up a little bit. Maybe there's a little bit of a flurry, but nothing happens. That's most likely to occur for most news releases. However, you know, we want to differentiate between these two, because as traders, we want to know, hey, do we buy this dip here and thinking it's this, or are we selling here thinking it's that? You know, if we do the wrong thing, we're going to get caught out. So how do we judge whether it's genuinely market moving news or it's just algos and things having a little bit of an algo party, taking it to highs, taking it to lows, and back to where we were? So we start to look at clues. Now, the first thing obviously is we're taking in this information that we have pre-market. If a lot of people were looking at it and a lot of people were expecting something and the number was a surprise, i.e., you know, they come out, and we can take time. Guys, we're not trying to compete with all the algos that instantly react into the news. Trust me when I say to you that if we have a really good move, you will have plenty of time to get on it. You'll have time to assess what's the number in terms of how do people perceive it. We don't care about what the number actually is. All we want to know is how traders are perceiving it. And we can get that information pretty much straight away, because the number comes out, it's embargoed, the press release is ready, it comes out on the button, so it comes out whatever time it is. We can read that quickly, we can say, hey, listen, this is way worse than expected, blah, 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 way better than expected, or it's neutral. So we know that that's generally how people will perceive it. So whether that affects the market or not, we don't know yet, but at least we know that, hey, this is way out of the range that people were expecting. It's going to catch people out, it's going to want to get people in, it's going to create participants. We might be looking more of like this scenario, a reprice scenario, because it's something that's affected the intraday valuation or the perceived valuation of what we're trading, as opposed to that. So we see that, then maybe we can then look for this. If we see that the number was something and nothing within expected range, nothing exciting, and it's pushing up to the upside, then we're going to be a little bit reluctant to chase it, and perhaps we're going to trade for a reversal kind of thing. Now, bearing in mind, the other thing we can look at is that we've got plenty of time here. There's no need to rush it. If it's a genuine play where we are getting a reprice scenario, we are going to get 1 tiny pullback, 2 a bigger pullback, 3 a bigger cycle. That's usually the kind of pattern we get. I'm being very broad here. That's usually the type of pattern we get. So we've got opportunity to get on this. If this is a reprice scenario and we're talking about a new trend, we can position, you know, later on down the line, 10 minutes, 15 minutes, 5 minutes, whatever it may be, there's opportunity, even, you know, towards the end of the trading day. If it's this kind of spike scenario, we're going to have to be a little bit more prepared for it, and perhaps I've done another video about this, about trading the reversal when it comes back through the middle. I'm not going to talk about the setup for that now, but the point is we can start to see the price action. If it's holding at highs after the news and it's sitting there and we had good volume, then we can say, hey, you know what, this is probably going to affect the market. This is probably going to continue. Let's have a little play on this. Let's have a look at it. The clues before we've already started stacking up, i.e. yes, people are looking at it. 1, so people at the screen waiting for it. 2, it's a surprise. Yes. 3, we've now got the price action, which could determine we're going to get a further move. Okay, I'll pull the trigger on it. But if we don't get any of these and we're like, no, you know, it's not that market moving. It's not a surprise. It's not a surprise announcement. And we've got a little bit of a move, but it's kind of dipping back a bit now. You're probably not going to pull the trigger, right? So you're making the best judgment on the information you've got. So the summary here, guys, is you can't tell if it's going to affect the market or not, but we can pick up the clues. Economic calendar, know if it's something that people are looking at. What's the expectation? Are traders actually looking at it? We can use the financial media for that. It's one of the useful things of the financial media. We can see what people are expecting. 3, how the number related to the expected value. If it was in line, then perhaps we're not going to get much of a move. If it was significantly worse or better, then we may get a lot more move, and especially if other people are looking at it. And then, of course, for the few minutes after, we're going to look at the technicals. We're going to see, hey, is the market pushing to highs? Is it holding above highs? Is it just kind of chopping back and forth? Dirty candles, I call it. 1 green, 1 red, 1 green, 1 red. Or do we have sustained green and holding, or sustained red and holding? And all that information is going to give us a much better idea of whether to pull the trigger on a trade or stand back. All right, guys, hope you liked the video. Give it a thumbs up if you did. Don't forget to subscribe for more videos from me and other traders on the channel. And as always, welcome comments in the comment section below. Take care, good trading, keep your risk managed. Bye-bye.